Stock of the day though, thought I'd pick Nick Scali. Half year earnings show revenue up 57%, while profit for the half year up 80%. Shareholders will receive a fully franked dividend of 40 cents a share. Company says January trade had exceeded expectation, but would be difficult to provide guidance until later in the year. The group plans to open 4 new stores in the second half of the financial year. It's, look at that, down 12% today. Market a bit rattled by this, Francesco. Were you?
Yeah, look, well, I wouldn't say rattled, but initially confused until you read the outlook statement. It was a really good result, but the question I would put to it is, is this the top of the market for them? Yep. January's strongest trading month. Well, January's been pretty good for everyone, but these interest rate hikes could start biting. Nick Scali tends to be top end retail. Yep. But you might lose some some consumers that are at the top end, but may move down to the middle of the road consumption.
Now, they got this new one, isn't it? Plush, is it?
Yeah, they've invested in another next level down. But the question, obviously at Plush they lose some consumers down to the lower end of consumption. Right. Yeah, when you're at the top end of consumption, there's no one coming in from the top above you. So the market's going to be tough for them into 2023 with interest rate rises as well. And opening 4 new stores, that's an investment. In one hand, they're looking at expansion, but on the other word, they're saying that they're going into a tough environment. So. Yep. I think the market's looked at this and said, well, maybe the good times might be coming to an end for them in the short term.
But we had these trading updates only 2 or 3 weeks ago from the retailers who were saying, great December,
yes,
booming December,
yes.
Then the ABS figures came out, retail sales fell off a cliff, worse than anyone expected, and everyone's going, what the hell? What's
scratching
going on
our heads
here?
a bit, aren't we?
Yes.
Yeah. So a lot of this is looking in the rearview mirror too, and the retailers are saying, they've had a good end of the year. I think you'll find that with restrictions and shutdowns and things like that, consumers have been sort of, had their hands tied for a little bit. Yes, the online consumption's been very, very good, but at the other end of consumption, so things like domestic travel, accommodation and things like that, we've seen, difficult to get accommodation in Australia. Yeah. So I think that's where the confusion lies.
Changing.
The spending pattern changes, but now that interest rate rises are going to start biting in next year, we would expect another one this week, tomorrow, and maybe another one in March for Australians. We think the Fed in the US is going to keep going probably until maybe April, May. So it's been a very fast increase in interest rates. So I think at some point, the consumer's just going to go, hang on a minute, we better watch what we're doing.
Okay. So you wouldn't be getting into Nick Scali?
No, not into Nick Scali. If I own it, I'd probably be either selling it or lightening the load.
Oh, okay. Taking profits. Josh?
Yeah, very similar thought. 2023 is meant to be quite a tough year for consumers. This one's still recovering a little bit from its COVID hangover. It's actually up about 60% from its lows. Yep. So it did miss. The revenue numbers seem good, up 57%, but that was about 5% below analyst expectations leading into the report. So I think that's the big difference between the annual report and those quarterly updates you mentioned is quarterly updates, okay, they're the numbers and it's obviously past looking. The full financial year results is when you get that forward guidance and you get a lot of analysis from the management of the own firm. Not to give guidance is a concern as well. And we're definitely sort of eyeing that retail recession that might be coming in 2023. So
are you selling Nick Scali as well?
Yeah.
Take profits?
Yeah.
Okay. So are you getting out of retail altogether?
I think we've got a couple on the show today, so I think that's the general theme. I don't think there's any need to be, especially in that really discretionary sector like Nick Scali, where you don't necessarily have a need to buy those products.
Right.
As we get the high cost pressures, you know, a lot of fixed mortgages coming off in the middle of the year, in line with those interest rates probably peaking in June.
Yeah.
The cost pressures are going to get more and more. You know, savings rates have come down quite a bit after everyone sort of stashed away a fair bit during COVID. So,
Yeah, too right.
you know, everyone's feeling the bite, and the area of the market that's going to drop off in their spending, as we've seen from the consumer retail numbers, is going to be that sort of high-end mark.
So out of retail altogether?
I wouldn't say altogether, but I'd be looking very closely at the retail stocks that I have in my portfolio, definitely. There's things like JB Hi-Fi, which I think, if you look back at how they've performed, they've been very resilient. And I think, a stock like JB Hi-Fi, they're very well managed.
Yeah.
They manage their costs extremely well, and they pay a reasonably good dividend. So, depending on where people are at and sort of what's their motivation. If their motivation is income, then I'd be happy to hold something like that. Right. But some of these
supermarkets
ones,
fall into that.
Supermarkets fall into they're non-discretionary. So and they're okay. Portfolios, you have to hold sort of Woolies and Coles, but do you downsize or do you upsize? I'd probably just be holding where wouldn't be overweight or underweight in those.
Yeah, we're more skewed towards those discretionary stocks that have that non-cyclical feel. So, for example, Baby Bunting and those sort of discretionary stocks that are going to be very consistent in their
So you like Baby Bunting?
Yeah, we like.
They've been smashed in the last month.
In the last
6 weeks.
They've recovered quite a bit after the recent update. They had a bit of a squeeze in their margins, and a lot of that's due to stamping out a lot of the competition. So they're almost becoming like a monopoly in the space.
Right.
So they had to take a little bit of a hit to do so.
Yeah, they're cheaper now.
Come out a bit better.
Yeah. Well, no, that's what I said. They've been.
They
were hit pretty hard. So. That'd be Baby Bunty be good buying at these levels.
Yeah, you almost put it in a similar category as to how Nick Scali was, over the last 5 years. It's been a really strong performer for shareholders.
Okay.
It's averaged about a 6% yield in that time, which is expected to be maintained. So you're getting above market yield anyway.
So you'd switch from Nick Scali to Baby Bunting?
Yeah.
If you wanted to keep a retail exposure?
Yeah, definitely.
Okay, interesting. All right, let's get into the stocks that